Hello and namaskar, viewers. I am Sanjeev Pandya, welcoming you to the season 5 of our show. Yes, the faces are same, the individuals are the same, but the show name is different. From Tax Talk, now it's Money Talks with AJ right here on ITV Gold. 4 seasons have been gone by, and your support and your comments have been very, very encouraging. And that's why we are all set to bring this fifth season, first episode of the fifth season. And this is the first episode, Money Talks with AJ. Now, you know, AJ is a CPA and MBA with Science CPA Services. And we thank Science CPA Services for sponsoring the show. Science CPA Services is full-fledged professional accounting firm located in the state of New Jersey. They've got 2 convenient locations, but doesn't matter where you are in USA because they do taxes for USA. Any question you have, you can reach out to them. Visit the website, scicpa.com. But, you know, this is not the tax season. I'm sure you would tell me that. But it's better to start planning right now. We are already in the month of May and time flies. And this is the time you should really look into it and start planning accordingly and see if you can save money on your taxes. Taxes you have to pay, but this is the time you should look into it to reduce your tax liability by investing money. Because remember, money makes money, and that's why this show is all about Money Talks with AJ. And with that note, ladies and gentlemen, join me to welcome. I'm happy to reintroduce you for the season 5 first episode, one and only Mr. AJ Kumar. AJ, welcome to the show.
Thank you, Sanjeevji, and I thank you, viewers. I'm very excited to be here for the 5th year, for the 5th season. This season, we brings little more than the tax talks. We talk about money. You know, a penny saved is a penny earned. This year, we'll talk a lot about how to save money, how to invest money, how to make money, how to make your money make money, not just taxes. So please stay tuned. We have a lot to share. We have a lot to talk about. We bring you 5th season, Money Talks with AJ Kumar.
Right here. Now, AJ, let's just talk, let's just go in a little bit deeper that you say that you need to make sure that your money makes money. Now, let's give a little bit of, information. May not be a very good information, but it's a reality. It's a fact. You are a CPA. Tell us about the current tax brackets for the U.S. taxpayers that IRS has it, and when we pay that taxes, are they highest or lowest in the history, the current whatever the tax rate is? And then if that's the tax rate we pay, besides that, how many other taxes an individual taxpayer pays that they may not be aware of it, that what it adds up to? So I really like you to give a little breakdown on that.
I'll be happy to, Sanjeevji. So IRS income tax rate is currently 37%. Then on top of it, you pay state income tax rate. Say, for example, New Jersey has 9% income tax rate. So between IRS and state, your income tax rate is 46%. You have to work somewhere to make money. That's called payroll taxes, which includes generally Social Security tax of 6.2%, Medicare tax of 1.45%. You have SUI, state unemployment, state disability, family leave insurance. Give or take, around 10% is what we call payroll taxes or self-employment taxes. If you have a business, you are paying self-employment taxes, which is around 10%, including Social Security and Medicare taxes. So your 46% just became 56%. Now you earned money when you go out to spend money, to buy food, to buy grocery, to buy clothes, to buy stuff, you pay sales tax. In New Jersey, sales tax is 6.625%. So your 56% just became 62.6%, not counting the capital gain taxes, not counting the property taxes, not counting the sewer taxes, not counting the net investment taxes. You have money, we will make a name to take your money and we'll call it taxes. More than 60% of the money, directly or indirectly, is spent on taxes. How do you win this game? You make $100. Know for well, $60 does not belong to you. How do you make the ends meet? If you can't have your money make money for you. If you don't know how to invest money, you will always be working for money. You will always be hand to mouth. You have to win this game, making sure your money is earning money when you are not working. You know the famous saying, Sanjeev ji? If your money is not making money, you have to keep working to make money.
Absolutely.
The only way to win this game is to find a situation, find a way where your money is making money. And the example I give, Sanjeev
Please,
ji,
yes.
buying a car, $100,000 BMW, is not an asset.
Luxury
it's a
car.
liability.
Yeah.
To show off to somebody. You are committing to a large investment just to go from point A to point B is costing you $100 a trip. It's not an investment. It's a liability that you're buying. Be cognizant of what you're buying, what your assets are. Make sure your assets are cash producing assets. In one of the episodes, we'll cover 10 most important assets that you should be buying. In one of the episodes, we'll also cover how to take the tariff back from the government if you own a business. In one of the episodes, we'll tell you the difference between ETF, stocks, REITs, real estate investment trust, to ensure that you know where to invest the money. So we have a lot of things planned in this season 5, which we call Money Talks with AJ Kumar. So please stay tuned.
It's going to be very interesting, AJ, that I'm glad that you touch base upon this, the shows and episodes and future episodes. But let's go back to what you just said. We are in New Jersey. We live in New Jersey, and you say roughly about 62% of taxpayers' income goes into all these taxes, right? And
More
not
than
even
60%.
more than 60%, not even counting certain taxes that you
Right.
just mentioned. Now, would that be the same kind of scenario in other states also, whether it's in New York or
Absolutely,
Illinois,
absolutely. I'm
Michigan?
glad you brought it up. So some people will say, well, Florida does not have the income tax. What they are saying is Florida does not have a personal income tax, or Texas does not have a personal income tax. But nobody is talking about that Florida has excise tax. Delaware has corporate income tax. Delaware franchise tax can be up to $200,000 per year, which is $75 flat fee in New Jersey. What's the point here? The point here is every state has to run their affair by collecting money from the taxpayer. If they are not collecting the personal income tax, they are collecting money from the taxpayer by calling it a different name. So for a small business, a lot of people ask us, can I move my residence to Philadelphia? I have a business in New Jersey. Can I move my business to Texas? I can work from anywhere. If you have nexus with a state, if you have a business in New Jersey, if you are earning from New Jersey, you still have to pay taxes in New Jersey on your global income, including the income that you are making in a non-tax state, including Florida. People have 2 jobs, Florida and New Jersey. They end up paying taxes in New Jersey, even on the income that's earned in Florida. So you have to be extremely careful when you calculate the taxes, when you think about the tax situation, tax efficiency. Just by moving the residence from one state to another state does not really eliminate the state taxes.
So now if average person, let's say I'm rounding up the number, AJG, 60%, it could be 62, 65, depending upon where they live in the USA. If someone is paying 60% of their income towards only the taxes, and this is just a now, it could even get higher, in the future as the year goes by, then they should really look into it that whatever money that they are saving after paying taxes, and this doesn't even include the mortgage and the rent and anything like that, right? So then they should really figure out where to invest money, where money would make money, so they could have at least an average savings or maybe a decent savings when they retire. And in this scenario, we have not even talked about college tuition and all the other expenses where cost of living is really, really getting high. So what I'm trying to say is that, AJ, based upon your knowledge and experience and expertise as a CPA and MBA and CBA, I think it would be very, very helpful if you give out more information to our viewers right here in the show, Money Talks with AJ, to say where they can park money, where they can invest money, where money will make money, and that would offset some of this hidden expenses that you have, which is the taxes related, right? So they can save money.
You're 100% right.
Yep.
Not only we have to be concerned about making more money, we have to be always keep on the back of the mind, is my investment tax efficient investment? I'm trying to make more money, but it's not helping making more money if 60% of this money is going into taxes. How do I make the balanced portfolio around it? How do I make money, minimize taxes, then have the savings done in the right place where the taxes can be minimized and the money can grow itself? So it's not just one quadrant, it's not just one situation, I want to make money. Or we see it every day, how do I minimize my taxes? Not as simple. It's not a straight line equation. You have to be making more money, you have to be minimizing more taxes, you have to be investing money into cash flow asset as opposed to liability asset. An example I gave is the car. So living within your means is a good thing. You have to invest money into certain asset, and it's not something that you can cover in a 25-minute episode, Sanjeevji. So in this show, the reason we call this show as Money Talks with AJ as opposed to Tax Talks, we wanted to bring more information than just taxes. In future episode, we'll also be bringing information on where to invest money. How do you grow money tax-free? There are certain assets that can grow tax-free. Then there are certain assets which have higher growth than lower growth. Then there are assets that produces regular cash flow, not just the growth. So there are a lot of things that you have to consider, a lot of things you have to talk about. And in this episode, being the first episode, we also wanted to bring international exposure. I mean, I'm sure you have heard Prime Minister Modi mention, don't buy gold. What impact does it have on a taxpayer? Why did Prime Minister Modi, the head of a country, is asking all the citizens not to buy a particular commodity? What's the rationale here? And what impact would it have on the gold prices or the gold assets that you have in your portfolio? So this is the show where we'll be talking about everyday topic, your topic, what you should be thinking about, what's related to you here.
You and your money.
Absolutely.
That's it. That's what Money Talks. Before we go on a break, AJ, we have less than 1 minute. I have a quick question. The tax bracket that you mentioned, forget all the other taxes. I'm just talking about IRS tax bracket. Is this the highest in the history so far, or where does this tax bracket stand in the history of USA when it comes to Uncle Sam?
Absolutely. I'm glad you pointed it out, Sanjeevji. So as much as 60% looks ugly, when I say 37% is the IRS income tax, believe it or not, this is the lowest income tax bracket this country has seen in last 100 years.
Amazing.
37% is the lowest income tax bracket this country has seen. This is just the IRS income taxes, add state income tax, add Social Security, Medicare, SUI, SDI, FLI, property tax, real estate tax, capital gain tax, net investment tax, sales tax, and then you come back how much money you are left with.
Okay, so basically IRS tax is the lowest. 37% is the lowest. All right, with that note, we're going to take a break. And when we come back, as AJ mentioned, we're going to talk about Prime Minister Narendra Modi's suggestions to the people of India. Why did he say that? That's all coming up right after this messages. Stay with us. Welcome back to the second half of the Money Talks with AJ. You just joined in? Yes, it's a brand new show. Season 5, Money Talks. And this time the title has changed. Everything else remains the same. The individuals are the same. AJ Kumar of SCP CPA Services is the same. I am same. And this time we've got some more information, some incredible information that will help you to plan your future ahead. And that's why it's called Money Talks with AJ right here on ITV Gold. Moving on to the show, right before the break, AJ mentioned about India's Prime Minister Narendra Modi when he gave out those 7 suggestions. And those 7 suggestions, actually, when you really look at it, it does make sense because, in light of the current economic situation, this really makes sense because all the countries, entire world is not sure what's going to happen because of US, Iran and Israel-Iran conflict and the Strait of Hormuz, which you all know about. So what Modi ji said, it really made sense. But how deep can we go and what can we tell you more about that? That's why AJ's got information. So AJ, Modi ji said that the reason you should not buy gold for 1 year because most of the gold is being imported, and when they import gold, obviously they have to pay money in the dollars, right? And what happens is, I read somewhere that NRIs from all over the world, they roughly send AJ about $135 billion to India, to their families and everybody else. So there is $135 billion coming, right? But against that, when the government of India, when they have to pay roughly $70 billion to import gold, the gap is getting shorter and shorter. And Modi ji says that if we don't buy gold, it will help us to increase our gap and it will help us on a rainy day.
Absolutely, absolutely. So two different aspects to it, and you are 100% right. These suggestions by Prime Minister Modi are given in light of Iran war, the international situation that we see, a lot of uncertainty around it. People were thinking Iran war is going to be a few days effort. Now it's been 2 months, 60 days plus, and we are still having the Iran war.
Yes.
So knowing everything, Strait of Hormuz is closed. Half of the gas that India buys comes through that channel. So if we can minimize the fuel usage, if we can take head of the Prime Minister Modi's suggestions, it's a good thing in the long run. And gold is an asset that Indian people buy it and they keep it there, meaning it does not go back in the market. Most of the gold that Indian people buy is called consumption, meaning they buy a jewelry which they keep in their family for generations. They generally don't buy it.
Yeah.
Indian gold consumption is almost twice of the gold produced in India. So half of the consumption is imported from outside India.
Yes.
That takes US dollar. A lot of this import-export happens in US dollar. These countries are not taking Indian rupees. So what it does, it lowers your foreign currency. Foreign reserves goes down when you are buying something, when you are importing something. So if you can control this buying of gold. So Indian government, Prime Minister Modi wants NRIs to send money, to send more money to India. They don't want to limit it. They want to increase it. And how do they increase it as government? They can increase the interest rate on NRE account, NRO account. They can give some additional benefit, some tax advantage on the interest earned on the NRO account can be made non-taxable, meaning there are a lot of plans that can be put in place to increase the transfer, to increase sending money from the foreign countries to Indian countries. That's what they want to increase. What they're trying to reduce is outflow of money. They want to reduce the import. And gold is one thing that if Prime Minister Modi really go out of his way, make this announcement, and a lot of people stop buying gold or minimize gold. If the country can minimize just 10% consumption, it could be worth $10 billion. So we are talking about billions of dollars.
Okay.
Instead of buying 10 ounce, you buy 9 ounce. Not a big deal. You can still make ends meet. Just be careful what you're doing. All these things are said in national interest. Prime Minister Modi made these 7 suggestions about the gas prices, about the travel, about farming, about gold, all in national interest. So whatever you can do your part.
And this is in the national interest because this is not the first time that Prime Minister of India has said this. In the past, one Prime Minister, former Prime Minister Indira Gandhi ji in 1967 had said that don't buy gold because that was affecting reserve back then. Back then, India was even underdeveloped country. In the 90s, when India had seen the financial crisis under Manmohan Singh's government and everything else, at that time, the finance minister Chidambaram, PC Chidambaram, had also said not to buy gold, hold on to it. So this is not the first time that Modi ji had said that. But AJ, what we should do is that next week, I think we should talk upon that. How is that impacting Modi ji's message? How is that impacting to NRIs living here in the USA about gold buying? So we're going to talk about that. We're going to talk about that. Now let's move on to other topic where we say money makes money, and that's why money should be be saved. In my question to you is that can you suggest some of the money savings, money savings plans in India where people can park their money and that money will make money and it will reduce their high tax bracket in India as well?
Absolutely, and we have a full episode planned. I'll give you
Just a brief
teaser trailer.
Yeah, exactly.
I'll give you the brief information about it, but we have 10 assets we should be investing in,
Okay.
and then 10 assets we should be avoiding investing. Take an example. If you have a business, buying a shop where you can run the business from is an asset. Why? Because you are not paying the rent on it. It's helping you with the cash flow. If you have a business, buying a land just lying there is really not an asset. It's not generating cash. You're hoping the land will increase in value, which may or may not. So you have to be careful. And if you want to make it worse, buy a car. That we were saying $100,000 car is not an asset. It's a liability. What could be the other potential good asset? You can buy ETFs, especially the cash dividend ETFs. Great idea. You don't understand the stock market? How about the index funds? S&P, Russell 1000, there are a lot of them. Well, how about investing into private companies? Be careful. How much money you have, how much money you can afford to lose, and then, meaning higher the risk you are taking to make more money, higher the money you can make, higher the interest you can make on it. So you have to be careful, try to keep a balanced asset. The question we are asked in last 24 hours, should I be investing money into India? Now, Prime Minister Modi said, don't buy gold. What impact is it going to have in Indian market? Should we be investing money into India or not? So multiple things. First, you have to understand what you're investing in. Investment is always have some inheritance risk. Second, keep it balanced. Not everything can be invested into one part. Third, when you think about international investment, make sure you understand the compliance around it. What are the tax compliance? What are the reporting compliance? You may have foreign bank account reporting, you may have foreign asset reporting, you may have 5471, 5472 reporting. So make sure not only you're keeping a balanced portfolio, meaning not investing everything into one asset. Second, while you're investing it, you understand the consequences, the compliance around this investment. But investing into, generally speaking, the rule of thumb is investing into a developing country should result into better outcomes, better returns than investing into a developed country. Developing country in this example is India. Developed country in this example is US. So crude example, buying a land or an apartment in India should increase in value percentage-wise more than the same thing in US, except you have to factor in the exchange rate fluctuation. A lot of people are counting the way Prime Minister Modi's policies are going. They are saying for the first time they may see rupees getting stronger than dollar. Now the rupees is almost 95 rupees per dollar. Mm-hmm. What if the rupees starts going down? What if $1 means 90 rupees? Now you have a situation changing. It has never happened before. Generally speaking, in a longer period of time, rupees have always been going up compared to dollar. So you just have to factor in few things when you do these type of investments.
All right, very good, very useful information. And ladies and gentlemen, I just want to say this is just the beginning. This is the first episode of the season 5, and we have named this the entire episode Money Talks with AJ. AJ is a CPA, MBA, and CVA with Science CPA Services. As I mentioned earlier, full-fledged professional accounting firm located in the state of New Jersey. Reach out to them. Go online, sciencecpaservices.com, right? And then 908-380-6876 is the number. Have them review your taxes and everything, and that's where they can guide you the way you can save money. And remember, as AJ said earlier, the money saved is money earned. So you need to save that money, reduce your tax liability, and let that saved money make you money also. might be difficult to understand, but if you really, if you really think about that, it will definitely help you. So that's what the show is all about. And, once again, we are so appreciative and we are so thankful to Suhag Jewelers for co-sponsoring this show, Money Talks, with AJ Kumar, right here on ITV Gold. With that note, AJ, thank you so very much
My
for
pleasure.
all your information and suggestions. Again, this is just the what we call is a trailer,
Yep.
because ये
It's
trailer है,
tip of the
picture अभी
iceberg.
बाकी है.
Absolutely.
And in episodes to come in the future, every week, make sure you follow this episode. There will be very, very useful information given to you, and it will be related to you. With that note, AJ, once again, thank you so very much.
Thank
you. With that note, I am Sanjeev Pandya. Until we meet again, same place, same time, do take care of yourself. And remember, money makes money. So long.